All right. Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 5th. Mike Boutros with you guys on the horn. Good to be with you guys this morning on the, I guess on the night after an awesome reaction we got from yesterday's Fed decision. Look, I'm actually on a really tight time frame today. Do have a medical appointment I need to run to, but the list is long. I want to focus on what I'm really trading here. So we'll take a look at DXY. Dollar CAD's on the list. You have non-farm payrolls on tap tomorrow. You got Canada employment on tap tomorrow. I'm involved in dollar CAD. We'll take a quick look at what Euro Aussie did. Someone in the room has been asking about that. Ty, I got you on all three of those next. SPX, NDX, DJI, phenomenal levels. Phenomenal levels. Of the lot, NASDAQ's probably not the cleanest, right? I'd probably say SPX and DJI are spot on, Ty. But we'll take a look at those levels. Euro, Aussie, gold. I got you on the list for that, and we'll wrap it up with a quick look at Kiwi. I also just want to take a look at Bitcoin. We are at a pretty major inflection point. It's do or die here. Silver, I'll take a quick note on that for you as well, and we'll wrap it up there. Let's jump right in. DXY, here's what it looked like right into the start of the week, guys, on the weekly chart. Here's where we are right now. All right. 103.82 still the level to beat. We haven't been able to do much there. The pullback that we were looking for early in the week largely materialized, and now we're seeing this little umph, okay? On the daily chart, it looks like this. That was the 103.82 tap. We were looking for the pullback. We got the pullback. That pullback now rubber banding back. The whole focus is on what happens on this recovery into the close of the week. If the return or the reversal off resistance was legit, this bounce should terminate ahead of the high close, okay? And then we look for the next leg lower, 101.80s, 101.94, the high day close from back here in 2020. If this rally persists and pushes through the high close, there's nothing to stop 103.82 from popping, and there's nothing beyond that until 104.88. So the break, the turn from resistance is the focus right now. That recovery, here's what it looked like. Here's what it looked like early in the week. Guys, if you were with me on Twitter during the release yesterday, I tweeted out this chart in real time. Here's what it looked like on the 60. Here's what it looked like on the 30. Nice consolidation pattern. This was FOMC. I tweeted once it tested support. I tweeted once it tested resistance, and I tweeted a third tweet on the break lower, right? So this gave us the indication, this gave us the wherewithal to play some of the dollar shorts. I was on this via CAD. There was an opportunity in Euro, although a little bit short-lived. We'll take a look at that in a moment as well. But faded out of 3/4 of that position on my break even on the rest. So if it pops higher, I think entry is 27, or right into the 28 handle. If we top higher in dollar CAD, will probably get kicked out of that one. But the point being, this needs to terminate. Okay, this needs to terminate rather soon. Again, trendline resistance off the highs if we are moving lower in the dollar. What happened yesterday? The Fed came out and said, we're not doing 75, okay? And that's really one of the main things we've been looking at. Here's what the Fed fund futures are pricing in for June now. We've abated any type of expectation for a 75 basis point hike. We're right in line now with 50, 50, 50. And if you head out to December, obviously that has eased, right? This was like 3.25. To 350 even on some of the interest rate expectations moving forward. So we've brought down interest rate expectations to what we would consider a more reasonable level. You've seen treasuries haven't necessarily come off. I know that you look at that here in the room, Ty, as well. Haven't necessarily done much. It's been a boring trade there. Still looks like it has the potential for a pullback, some nice divergence into the highs. So theme being, I wouldn't be too, surprised if the dollar does continue to soften. That said, it is a strong uptrend. And if we look at this out, this is the 2-hour. The one thing I want to, highlight and reference is if this is a turn ahead of uptrend resistance, and this is just a test of uptrend support now, former resistance, that would have been it as well. So you're getting conflicting signals. That's okay. It's the first close of the first week of the month. Great. We're heading into non-farm payrolls tomorrow. Expectations are for a print of 391,000. Unemployment rate is expected to drive down one more, tenth of a percentage to 3.5. Guys, look at the metrics into the release tomorrow on the breakdown of private sector and government. Look at the breakdown of the average hourly hours, right? And average hourly, that's going to be huge in trying to assess. The labor market is, again, in my opinion, I don't want to get into the weeds. You heard Powell talk about it yesterday. There's like some odd million positions open, more than there are workers to fill, right? So we're at a deficit. The labor market's tight. I don't think the unemployment 390, 400, 350, you're not going to see much play there. The unemployment rate at 3.5 may have the harder hold here as it pertains to the labor force participation. So remember, when labor force participation decreases, right, the labor pool shrinks, it puts artificial downward pressure on the unemployment rate. So we're looking to see what impact that has, right? Participation rate was at 62.4% last month, so we'll look to see what the breakdown is. But I think that the problem with the labor markets now are a little bit more structural than anything. So it's going to be interesting to see what tomorrow's print reveals. But that's what I'm looking at with DXY. Any questions on this? Basically looking for terminus failure somewhere soon here. Dollar CAD is what I'm still in right now. Here's what dollar CAD looked like last night. Give you guys a quick update on that. Such a beautiful trade. The week earlier, if you go to the previous update, we were talking about resistance into this key region. 128.80 into the 129 handle was the pivotal zone that we were looking for some exhaustion, and that's exactly what you got. That ended up probing just above, pushing below. Here was yesterday's Fed reading. On this trade, I actually took the short with a stop against the swing high as the Fed came out. Wicked me out, pulled back on this secondary rally. I just had so much conviction on the pullback to the dollar. I jumped right back in, stop against the high again, and we rode that down into a nice move. So last week's open ended up being the level. It was the same level we were talking about early in the week. If you go back, here's what it looked like again last night. The weekly open, 127.19, also ended up being Friday's low. Confluence support with the median line and uptrend support. Here's the blip. Like I said, I'm at break even on the rest of the trade. If this holds, which I hope it does, next level down, the limit is at I have it at 120, I have it at 126.95, like right into this zone right here. Okay, big pivot zone, basic 38.2 from the advance off the April low, the basic April opening range high before the inevitable breakout late in the month. Also converges on downtrend support, and later on into the open of next week, uptrend support as well. So I'd love to see a larger reaction there if we get it. As it stands, it does, at least all intents and purposes still look for that last tag lower. A basic retracement of the weekly range puts the 618 kind of up here. Don't really want it to get anywhere near that. A 38.2 puts you right here, 127.90. And again, my stop is just above that to break even. So maybe a little higher, maybe a stretch into here would wick me out, but that would still be downtrend resistance. And the big zone is, again, 26.76 all the way up into 27, essentially. Questions on dollar CAD. Canadian employment data comes out tomorrow at the same exact time. We're looking for a print there, about 55,000. Unemployment expected to downtick also to 5.2% from 5.3. So those double whammy Fridays for dollar CAD, when you get the employment data and non-farm payrolls, may offer some volatility here. Keep your eyes on Loonie heading into the close of the week. A quick reminder, guys, of why the conviction on this one was so high. I'm going backwards here, but I really think I'd be remiss if I didn't show you this again. This was huge. You remember? 28.14, 28.50, that level, we've been watching resistance on a closed basis all throughout the start of the year. Once it popped through, we made an objective call of the yearly opening range highs at 129. Here's the reversal. Watch the close for this week's candle. Anything sub 27.50 would be pretty bearish for putting us right back into the range. It wouldn't be bearish or bullish. It would be putting us right back into the objective yearly opening range and kind of nullify some of that. So keep that in mind. And here's the daily chart. 1618 extension off the low was also 129. The 2020 high day close, 28.80. Bam. Now, the high day close does drop a little bit because we have a new high day, which was right back here on the 2nd. So the new high day close is now 28.56. Open it up just a tad, but you get the picture. You know where key resistance is. All right. Questions on Loonie? That's number 2. Number 3, I just wanted to take a look at this because I was really impressed the way this played out. Here's Euro Aussie. We were following this on someone's request into the start of the week. We gave warning that looked like it wanted to make a move towards support. I was looking for 47.20. I'm sorry, what is that? 47.90s, maybe slope support max. It shattered right through, and in fact, 2 equal legs off the high basically caught the low. And here's what it looked like. Again, last night, right? And here's Euro Aussie on the intraday now. I'm not involved in this. I feel like we kind of missed the opportunity to fade that drop yesterday, but my favorite Fibonacci confluences, if you're sick of hearing me saying it, you're going to continue hearing me say it because my favorite ones, 100 off the high, 618 off the low, beautiful parallel. Okay, so the question is on this recovery, right? If this is a legitimate break of uptrend support, and again, don't take my word for it, 1 touch, 2 touch speculative, 3 touch confirms, 4th touch adds salt on it, there's the break. If it rallies more from here, you need to see failure ahead of 47.80s if we're still heading lower. But the initial inclination, at least from last night, was that's a fadeable drop. That was a big spot. If you're holding longs on this, it's not something worth like getting heavy on or getting queued on into the close of the week. Get really protective on it. Stops to break even pretty quick as we open up the US session, especially if this breaks higher. You know, a basic 38.2 of the drop actually converges on slope right there at 47.73. I didn't want to muck up the chart there last night, but that's basically what we're looking at as sort of max resistance if this is heading lower. Okay, so keep your eye on that Euro Aussie trade. It was a good, interesting setup there for a non-US based cross. Obviously, some people wanted to stay away from those. Okay, let's jump right into the rest of last night's update. And it was all about the equity markets, and what a beautiful, just across the board, guys, the levels are sensational. And we open up the session today, still risking a little bit more upside. I'm going to go back from the start and just show you where we are on whole. SPX at this point is now threatening an outside weekly reversal off the lows, off fresh yearly lows. Typically a bullish development if we were to close the week at these levels. Now remember that we started the week saying right after it dipped and held 40, basically that 4100 handle in intraday trade. Here's what it looked like on the daily chart. Once it recovered right back above 4117, we called it right that day. That's an exhaustion low. The break below 4117, if legit, should have been an accelerated move. It actually did accelerate throughout the day, but closed higher. That's your quintessential exhaustion trade. First level that we were looking at was 42.82. There's a basic 618 of 38.2, excuse me, of the drop. Let me put it back on here, right here, and then into slope resistance. And so slope resistance was where we were at last night. I wanted to give you that heads up. May see a little muddle lower, okay? Even if we were to drop down into 42.50s, 42.40s, you're still looking for possible slope support here. You don't typically want to jump on the median line reactions, guys, really early on the formation, but this is mature now, okay? We've seen a 25 support touch, 25% touch, a break through the median line saw acceleration, 75% parallel has been holding like a charm. So again, I love these levels. If you want to get a little bit more granular, I don't want to get too deep into the weeds, but a basic 38.2 would threaten a little bit deeper of a cut. A basic 236 comes right in line with trend. So 42.50 is the level we just noted. Max 42.14, maybe on an intraday stretch before you make, one more high, right? And the high first initial resistance is going to be right at last week's swing high there, which is where we are now, basically where we topped out at 43. Top side, 43.91, max 44.20. Area of interest for possible exhaustion. The resumption of downtrend. We're not out of the woods yet. We're not out of the woods yet. Remember, the slope we just broke. I'm going to zoom this out. 1 touch, all right? 2 touch, 3 touch, break. Even if it rallies up a little bit more, former slope support, turned resistance, maybe a little higher. You get the picture. Now, we haven't gotten an outside daily reversal. We haven't gotten anything on the near term that's red alert just yet. But I do want to just, again, draw your attention to that weekly chart. Pay attention to how this weekly candle closes, specifically with respect to 4,200. All right, intraday. Questions on SPX? Here's a 240. All right, NDX. Again, not the cleanest, all right, but we're also still getting some near-term structure, and I wanted to highlight that yesterday. Here's NDX on the weekly charts, guys. It's kind of a larger outside weekly reversal, but for me, it's a little bit more impactful because of that zone that we highlighted at 12,668, 12,950. Guys, we highlighted this zone on the initial breakdown way early in the year, back in February, never actually touched it, reversed. Here's the first actual drive. We closed right there last week, by the way, at 12,668, 12,947. All right, you're basically looking at the objective low week close from last year. You're looking at a basic 38.2 2020 rally. And you're getting, you know, some ongoing divergence here with weekly divergence, price action making a lower low, the oscillator not confirming that low. A subtlety that I pay attention to specifically as it pertains to the weekly charts. So a little bit of a different signal, a little bit bigger of a warning of a possible larger rally here in NASDAQ. Guys, it saw one of the sharpest parts of the decline. So wouldn't be too surprised if on the rubber band, you get the little bit larger of the recovery. Taking a look at NDX on the daily chart, pretty messy as well. Didn't really get that drive into 12,688. Obviously the upper end of that zone on the weekly chart. I don't have it here on the daily just for clean reasons, just to keep the chart tidy. But 12,864 for reference is the objective monthly open, right? And yesterday, that's basically where the drop failed before slingshotting higher. I think you get 13,724, maybe 13,950, but we're basically looking for the same type of setup as SPX, a little bit higher, but possible exhaustion. Okay, 13,724 right here. Former swing lows from right back here on that January drop. Topside breach from there, again, 14,263 into that 327 level. That's just going to be the uncovered gap from back here on the April drop down. It's going to be a basic 38.2, the entire decline from the yearly high. And then it's going to be basic downtrend resistance. So there's a lot up there. Again, this is a bigger call all the way up here. First focus for me is what happens on this drive. We could fail right here. A break back below 13,080 would be basically the resumptive move and attempted drive towards new lows. But that's what I'm looking at here with SPX. That's what I'm looking at here with SPX. One more thing, just a consideration. I don't want to muck up the chart too much, but a 1618 extension, I was looking at this earlier, gets into 13,635, just ahead. So like watch this immediate zone into the US trade session today. Questions on NDX? Okay, here we go. DJI. Here's what DJI looks like on the intraday charts. Very clean. Loved where it turned from. What a spectacular move. Okay, no change to any of the NDX levels. Here's DJI. I just gave you the whole suite because DJI is working on a bigger, more technically significant reversal, and it's coming off of seemingly downtrend support. Would have us looking for a stretch towards what? Downtrend resistance. That leaves a little bit more room to the upside. So here's the weekly chart. Watch this one specifically into the close of trade tomorrow. North of 33,500, basically gives you a little bit more warrant for the stretch. If we close southbound of 33,500, I'm still looking for the inevitable breakdown, but this is a defense of a couple of things, guys. Remember, NDX made a new yearly low. SPX made a new yearly low. DJI did not make a new yearly low. These non-confirmation turns oftentimes happen, or these non-confirmation lows, often happen, or often can be seen, are indicative of near-term market reversals, right? So it kind of lends fuel, lends evidence, lends more conviction to the idea, a notion of a little bit larger of a recovery here. Watch the weekly close. DJI on a daily chart is even cleaner. Beautiful zone, 618 extension of the decline, right off the top. A basic 236 of the entire 2020 rally. Again, the close lows for the year. Look at what we did there earlier in the week. Again, we called this right there. We're looking for the rally right after that close, right into the start of the week. First level was the slope. I think I gave you guys 33.7. Second level is going to be a basic 618 at the drop. Again, that's 34.3, 34.30. Bearish inval. What's the level that if we broke, man, we're probably heading higher, downtrend's burnt, and you look for basically kind of a breakout of the range, that's up into 34,792. It's the April high day reversal close, and it was also the objective April open. Both of those converge on slope into the start of next week. Intraday looks like this. Within the confines of the near-term advance off the lows, a very similar structure can be seen here is that we were looking at in NASDAQ and SPX. Here's what it looked like last night. Obviously, you haven't even opened up yet. Next near-term target on the upside, 34.3. It's the basic 618. And again, a topside stretch, 34.740. That's where we'd want to see possible topside exhaustion, possible resistance. Near-term support, you got to look at the median line first. That's 33,500. Questions? Just beautiful price action, guys. Beautiful price action. Looking for a terminus to the rally in stocks. It might happen today. It might happen tomorrow. You're basically looking for those topside levels to give us a larger kickback. All right. Questions on any of the equity runs so far? Excuse me. We're going to jump back into the FX front. Here's what Euro looks like. And here's what Euro looked like on our last update. Don't need that no more. Okay. So heading into the Fed, we were basically range. Like I said, this was one where you had the opportunity yesterday on the Fed on that dip to get long either against the weekly low or even just the session lows. This one would have actually worked a little better. I wouldn't have got chopped out as I did in dollar CAD first, but dollar CAD gave her the biggest stretch. So here's the stretch here. First level of interest was 106.37. You can't make this stuff up. Topside breach, we peaked right there. Here's the pullback. The focus is on this pullback, and the pullback needs to hold support ahead of 105.20 ideally if this is heading higher. I know Jamie's thinking the same thing. I know he issued the trade yesterday, guys, on swing as well. So a quick look at real near-term price action on just the stretch. And I just wanted to highlight 618 comes in, we're at 105.36. Right there. You know what I mean? So maybe a little lower into the open, maybe a test of 105.20. Okay, 105.20. I don't have the reference mark on what 105.20 is. Okay, it goes a ways back. 105.20 is going to be the low that you peaked back in 2015, specifically on the April drop. So some nice symmetry there. But keep an eye on that. Keep an eye on that, on those levels of support as we head into the US Open here. Here's the 120. Drop that 6. All right. Any questions? Oh, any questions here? On euro. Aussie dollar, another beautiful play, okay? Really strong reaction off support. You know, we came into the start of the week talking about looking for Aussie support. The ideal scenario was for a drop into 70.16, 69.90s to get the long. And this is where you have to be flexible with your trading strategy. You can't be too meticulous and want the cherry-picked entry every time. But you know what? In this market environment, I'd rather have missed a position like this than taking a position early, and then if it turns against me, well, I got to eat my own pride because there was no reason to take that position. So, hey, sometimes you just got to be a little bit more lucky than skillful, but at the end of the day, it was the right call, right? We were trading into downtrend support. We were trading into major confluence. And if this was going to be the trade that we were looking for a rally into the 618, ideally 72.70, which is the objective yearly open. Not Mike Boutros' opinion, not Jamie's opinion, fact, right? Guys, we peaked pips ahead of it. We peaked right at 72.66, right? There's that 22 yearly open. Can't make this stuff up. So on the rally, okay, as soon as we bottomed and broke a near-term breach of at least the weekly opening range, it looked like this pitchfork came into focus. Kept the focus again on that 72.70 level. Once we knew that low was in, the 38.2, which is covering that yearly open, same exact level, 72.71 was the 38.2 of the drop off the highs. Downtrend resistance right there as well. That's still your critical area of resistance. So focus right now on this trade is for support on the pullback for the last drive higher. You know, at the end of the day, a basic retracement off the lows was what I was looking at. The 618 comes right in line, right, with that slope, 71.20, 71.25. Maybe you don't even make it that low. Here's the objective weekly opening range highs, but we're looking for support into this zone if Aussie is going to make one last stretch. And on the top side, 72.70 and 73.13 are still, it's still a pretty major zone. Former swing highs, yearly open, you know, break and accelerated moves, that's going to invalidate the downtrend. So if you're going to at least test the downtrend resistance, you would want like one more test of the highs here. All right, no data of merit for Aussie for the remainder of the week. So just keep your eyes on non-farm payrolls tomorrow, 8:30 Eastern in the US. 6, 7, and 8. All right, I'm going to take a quick segue. I'm going to take a quick segue into Kiwi real quick, just to wrap this up. Here's what New Zealand dollar looked like. It was a very similar setup, right, as Aussie. We came into the week saying we're at pretty big support, like we're looking for a low, right, early in the week. Here's what Aussie ended up doing. The focus zone was right here. It drilled down deeper, but eventually did finally make the turn higher, okay? So no change to any of the levels. We just literally sat in that support zone all the way till FOMC. So talk about a clear-cut trade again yesterday. Not only was this rubber band, you had an opportunity to get long against the low, but a clear break of the weekly opening range has you looking for a Thursday high. It's Thursday, looking for a Thursday, Friday high, right? Here's the slingshot on the pullback, not as clean as Aussie, but like I'm looking for support like here. Like basically a little bit lower from where we are, like 64.70s. Maybe a drive into the weekly open. I don't even want to see it, but that's 64.60s. And then you look for, you know, maybe a little bit more of a basing move. But the whole hangover pullback is what the focus is on the US trade on all of these dollar crosses. Questions? That's New Zealand dollar. Number 9. All right, gold and silver. Here's gold. A breakout of sorts, but not enough follow through for us to get super excited. I mean, it was the obvious trade was the rally, right? Because dollar was pulling back. That was sort of the focus that we were looking for. Here was our last update on gold. And earlier in the week on the break, as soon as we opened up the week and broke back below the 618, we were looking for a low, ideally 1850 and 1827 to 1818. both levels we've been talking about for months. Okay, take this back to the weekly chart. This is absolutely paramount. Here's gold, guys. Here's gold. You can't make this stuff up. The break below 1920, 1903, the high close from last year, we talked about that early in the week, right into the open, had us looking for a low, 1850, or specifically 1818 to 1828. Critical areas of support, especially down here. If you break this, you're invalidating all types of uptrend. All types of uptrend. You're in really big trouble. It's like terminal. So we were looking for a low. The low registered, guys, at 1850 proper. So is that the low? Well, it's going to be a close above 1920 on a weekly close basis, in my opinion. That would sort of suggest that that was a low. All things held constant, this was support. We've rallied off uptrend support. Now are we going to slingshot into resistance and make the new low? Right? Here's the gold trade on the daily chart. It's too tighty. Same pitchfork we've been following since last year. Support, support. Didn't get the drive into 1849, which was the 2021 high week close, but man, 1850 held. So on this stretch, watch 1918 on the upside, last year's high day close that we registered right into the beginning of the year in January. That's on this critical slope, guys. You know, breakthrough, resistance, 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 acceleration, acceleration, resistance, acceleration, support, support, acceleration, puts you into like 1920s. Absolutely critical. Now add to that, you break down the intraday chart. Here's 1918 again, high day close. Here's slope for the current downtrend. Here's an area, again, max tolerance if there's any downtrend still left. But you could see some more upside here for sure. You know, I'm not really crazy about calling this necessarily a break of down channel because again, remember our philosophy and our basic discipline. Any 2 points make a trend line. It's the third that confirms it. Never really got a third. Yeah, it sailed through, but I could just remove this altogether and say, hey, we broke back above the median line, tested as support, looking for a test of the upper parallel. So maybe a little higher, right? I don't want to, again, muck up the charts too much, but I was looking at this earlier today as a possible upslope in play, okay? And if that's sort of the focus slope that we want to look at, and this is in play, I haven't gotten enough inflection to put my, put too much conviction on it, but it gives us right here, 1927s, maybe 1940s, 1939s. Constructive while above basically the lower parallel, but too early, too early. I just wanted to show it to you. Watch into the close of the week, especially if we break higher. This will hold a little bit more merit for me, but the risk is for a little bit more of a tailwind for gold in the near term. And especially if the dollar comes off or the dollar rally that we're looking at falters, then you expect to see a little bit more of a tailwind there as well. Silver. So that's gold, right? Silver also coming off of downtrend support. There's downtrend. Here is silver. Let me take you back to the weekly. Okay, we didn't even test the yearly range lows here. Ty, we didn't even make it to 22. So from the weekly chart, because I'm skittish, it's not quite as clean. I don't have as much conviction. But when you take a look at this on the daily chart, big old outside reversal candle, right? Big outside reversal candle yesterday. It's not off the lows, so it's not as strong a signal, but a bullish signal nonetheless. So you can see the stretch even get as, 2350s would still be within the confines of this massive pivot zone. Intraday, like I said, that's kind of the resistance zone I'm looking at. If you get a break out of this, all right, forget the weekly open at that point. We'll take a retracement off the high and the 618 will be our guide. Something like this. Puts you like 2460s. But focus right now is what kind of reaction you get in this key zone for silver. All right, so I have silver basically coming into resistance even closer, Ty, than gold at the moment. Okay, that's silver and gold, 9 and 10, or that's actually 10 and 11. The last thing I just want to touch on, because I think it's falling under the curtain, but something we should focus on, I think, just keep on the radar is the Bitcoin trade. So 37.3, we've talked about that for a while. It's been a slow mutter lower. You're getting divergence. What's this blip we saw yesterday? It wasn't an outside reversal candle, but it was a reversal candle that sort of cleared a multi-day range right into trend resistance, just using the highs as your guide. So that's a third touch yesterday, right? Confirms that slope. If we make it through 40,470, that's the outside candle here. It wasn't a reversal candle, but it was a massive outside candle close, which offered resistance to the next following days. That's on slope. That's the breakout zone. Anything sub 37.3, I told you, would be technically damning. There's a lot of room. There are possible stretch down to 32, down to 29 if that breaks. So again, I just want to highlight 37.3 into 45, let's call it 40,500, 40,470. That's the focal range for Bitcoin till this clears on a daily close basis. Forget the headlines. The technicals, I think, on this one are pretty clear. All things held constant, the downtrend's still intact. If we break lower, it's big, big, big disaster. You're close to resistance. Watch for a breakout of that zone. Questions? Okay, that's all I got on the equity front. If you guys are interested, I'm also looking at the support for Amazon. I've been looking at this trade for a couple of weeks, especially when it broke down through the median line here. Didn't think it was going to get down to 24.46, but we're there. We've spent 3 days there. This is going to be a third reversal kind of pump through it. It's downtrend support. Beyond that, big trouble. Just a quick note there on Amazon. SPX, you need a review on that, Ty. Nothing's changed, man. We're right on course. Okay, looking for support either at the median line today, max lower parallel, but I think the risk is still for another push, at least to attempt the highs again. All right, wrap it up there, guys. Again, thanks for, it's always good to see you guys in the morning, and I hope you guys are staying a little bit light as we head into non-farm payrolls tomorrow and CAD employment. The dollar stretch is the focus. Keep your eyes on what's happening also in the gold market. I think that's going to be a tell. And treasury yields, as I said, they've been really boring, but I think they're going to come to the forefront again, specifically if these highs continue kind of teeter out. So should get some guidance as we head into the close of the week with non-farm payrolls. All right, wrap it up there. Best of luck trading, guys, and I will see you on Monday for the free session on Daily FX, and then right back here on SB on Tuesday and Thursday. Best of luck trading. Cheers.